All right, what's going on, everybody? It's another week, which means it's the marathon. That's right. This is Ask Me Anything Happy Hour. Cheers to y'all with my tea on antibiotics, trying to kick this whatever this devil of a virus that I've had for 2 months is. So we are here to answer your questions, and in just a second, we'll go around the Brady Bunch loop here so you can get to know all the players and what we can then do for you. So we'll be back right after this. All right, we are back at it. Another week, another Ask Me Anything. Hopefully, you all have your questions ready. So get them in the comments. But what we're going to do is we're going to go around Brady Bunch Lane and we're going to hear what everybody's got going on. Mr. Snaggy.
Hi. What's up? Where are we? What's going on? Oh, it's Ask Me Anything again. My favorite time of the week. All right. Well, got a lot going on. We were just, racing cars in Vegas and going to Beatles shows and bebopping around the casino and the strip and watching the F1 races get set up and everything out in Las Vegas the last several days. So a lot of catching up from that, phone calls and emails and clients and hellos and all that wonderful stuff that you come home to. So that's been going on for me the last couple of days. And let's see. Got some beautiful weather. It's a little windy outside. We have baseball practice tonight. So thank you for the team for covering for me. So we do have a preview, and I know Chris is ready to rock that tonight. So join us at 6 o'clock for webinar number 4 of the day on Wednesday today. Should be a good one. And then, of course, we have the 3-day training starting Friday morning with new content that Chris has never taught before for most of the day Friday. And then we got a bunch of new experts and guests and opportunities coming on throughout the rest of the weekend, Saturday and Sunday. So super pumped up and excited for the next and final Money School Essentials 3-day training of 2023. I think it's going to be the best one yet. So pumped for that.
Awesome. And we'll go over to Gabby.
Hey, everybody. Some of you may love me. Some of you may hate me. I'm usually the person that grants wishes or denies them. At this stage, I feel like I'm doing a lot of denials, so I'm sorry about that. But we'll eventually get where we need to be. But yeah, I love these times too. It's just a good time for all the team to come together. And I know it's fun being in person, but at least with these, we get to check in with our team. So we saw a lot of you there, missed some of you, but it was a great time, and we'll look forward to the next one. Any of you who are wondering about the experience, definitely get in on the next one because that's going to be epic. We just keep doing it bigger and better every single time, I feel like.
Gabby starts with a guilty conscience. I love that. So she airs it here on Ask Me Anything. Steven, I didn't think he was going to have anything to say, but he had so much to say. Chris, I haven't seen you in a while, even though this is your 3rd show of the day, and you're still fighting a 2-month battle. You doing all right, brother?
I think I'm making the turn. I'm on the most ridiculous antibiotic. Second round of them trying to kick this thing. It's just that one that just keeps hanging on. But that'll happen when you don't sleep enough, you don't get enough rest, and you just keep pushing. Eventually, your body's just like, okay, F you. I'm gonna make you suffer. And oh my God, did I suffer out in Las Vegas.
That was going to be my dad. That was going to be my dad, founding father's advice for you, man. You just need some R&R. You just need some relax, some plug. Let your team handle things for a while. You got some good people around you, man. So let some people handle
it. My calendar.
Yeah, that's good. So I'm Jason, Orlando, Florida.
There's no time on my calendar. That's not
good. Follower's prescription. We know best. Not as good as moms do, but we know. So glad you guys are back. I really missed you all. I know you were having a lot of fun, but we're always having fun down here in Florida. So just changing people's lives, having fun, founding fathers, inspiring, educating fathers. Because I know after all the thousands of conversations, people are hurting, man. People are scared. People are uncertain. They don't know what they're supposed to be doing. They don't know who to trust. I'm telling them, trust themselves. Trust yourself. Love yourself just a little bit more. Respect yourself a little bit more. Pay yourself a little bit more. Take back control. That's the whole message. That's all what Founding Father stands for. Because once we start as dads, and we're not excluding the moms. I'm just happen to be a dad. But once we start taking back control as families, then we can go out and forth and really make impact in the world. Then we can be what we're meant to be, right? And over to Craig with that 5 o'clock shadow, man. You're looking pretty good there, bro.
Well, it is beard season, and as Chris had mentioned on the Wealth webinar, partially could be lack of sleep, just getting ready for this big 3-day event. Pretty jazzed about it. Going to be drinking lots of coffee. We're going to get this thing done. So, yeah, the beard is coming back. October is when it starts. I always started after my birthday, and here we go. So once we get that sucker full, we'll put the cap on, and we'll have a whole new look here. But
Dude, my dad did that for years until he stopped shaving. Don't be like my dad. He would start with the frost, growing the beard, and then the first robin in the spring he would shave, and then one year he just stopped. And now it's just like he's got ZZ Top beard all year round.
It comes it goes out in springtime because it gets too warm here. So cold. We got our first big snowstorm. Got about a foot of snow here in Colorado out by where I live. So that's pretty awesome. Yeah, over a foot of snow is great.
It was chilly down here, right, Steven? It was like 63 this morning here. I was cold. I got jeans on.
63.
It's a little warmer down here, but yeah.
Anyway, a lot going on. Looking forward to the upcoming 3-day, just doing lots of calls and trying to help as many people as I can. And now off to you, Sean.
Nice. I'll take my cap off and put it on you. Just kind of like recovering from Vegas. It was amazing. It's just so nice to be in person with everybody. Also got some new opportunities that I'm excited about participating in coming up too. And then looking forward to the 3-day weekend as well. And we did have snow this morning, but it's probably just finally melting at this point in the day.
By the way, if you're thinking about the 3-day weekend, go.
Yeah.
Go. I've listened to them. I learned so much things I never knew, right? Like I'm telling you from someone that is around the campfire a lot, talking to all of you a lot, go to the 3-day weekend. You will learn something. You will take something away that you can apply because knowledge ain't power. You got to apply it, folks. Go learn. Go apply. You won't be sad. Down that guy, Carson.
What's up, guys? Talking about the experience, I mean, it was amazing for me for a couple of reasons. One, to see you guys, because I never get to see you guys. You're all so far away. But two, it was the first time that I met my clients in person, and I loved it. I've never met anyone in person that I've helped actually accomplish anything, like a policy or a HELOC or whatever the case is. And there were multiple people there who I invited to come, and they came and made the effort. And it was awesome to see them in person and to get to know them more and put a face to the name. So it made me more excited to keep going to these events wherever they are in the country, because we have clients all over the country, right? So we can help people or have them join wherever we're at. And I think that was really powerful for me. And it made me more excited for these Ask Me Anything, because it's like, well, I know half you guys commenting now. I've seen you all.
Mm-hmm.
And I haven't had that before. So it also makes me more confident and makes me excited to be with them and you guys. But anyway, pretty cool experience, and excited for the 3-day this weekend as well. Joe?
So going after the experience, I was talking to this guy for about a year and a half. And I'm looking around the room, and I see this huge guy. His arms are huge. He's got veins coming out of his arms. And I'm like, wow, that's a big guy. And I hear this voice, hi, Joe. I'm like, oh, my God, Mike? As soon as I heard his voice, I was like, holy cow. Wow, what's up, man? And it's, when you put a face with a name, it's just so exciting and so awesome. So everybody has to come to the experience so we can see you in person.
Yes. And
Mike could have bench pressed all of us.
At the same time.
wait, remember, Steven, you called him out. You were like, I don't know what I thought you looked like, but I didn't think you looked like that.
Yeah, that was awesome.
Where is the next experience, Shauna?
Okay, so I'm not sure. I'm working on it. Today, we were thinking either Orlando, Florida, somewhere easy to travel to, or I was also looking in Hawaii a little bit too. So somewhere warm, I'm looking. But that doesn't. I know the dates, so we may not have the location, but we're thinking April 10th through the 13th. And if you want to start a payment plan, you can email me, and just know that we got you, and we'll figure out the really good details in the next couple weeks. But if you want to email me, I'll put my email in the chat.
No matter where it's at, it's going to be pretty epic. You know,
Yeah.
We can go anywhere. Heck, we could be in middle America, and just the experiences that we're going to do are what are going to be epic.
Yep. Totally cool.
Cool.
Okay.
All right, let's get rolling. I'm going to mute just because I got a vacuum coming my way.
Okay. Sat Gayu. After I make a deposit into my savings account called Whole Life at $1,100 per month, I can get a loan out of $10,000.
I already did the math. It'll be about 15 months before you get your 10,000.
Good job. I thought this was. I want to put $100 in and borrow $100,000 for my death benefit. I thought that's where we were going with that.
Yeah.
I was wondering if he was maybe missing a dump in or something too. That maybe he was putting a little bit more in, $1,100 a month plus some kind of dump in. So
Yeah, and
I think we just need more information.
Yeah, I don't think he's referencing. I think just the way that it's worded doesn't tell us like when. 1,100 a month times 12 months. What did you say it would be? 15 months to be able to take 10 out?
Yeah, around 15 months, maybe sooner.
Cool.
And a lot of that's going to depend too on how the policy's designed, but it's a good rule of thumb.
I got a whole series, just shameless plug. I had a whole new series that we just did for my YouTube channel. The first one just launched. What it does is it takes the how to design an IBC policy updated, and it drills down into each one, from the Nelson Nash design to the Beast to the Slayer to the Rock in the 9010, and it literally explains each one in very deep detail of why you would want to use each of these. I think they're all going to hit pretty well.
I know we talk about HELOCs in general, but I think it's important to make the distinction between like when someone also has that question about like if I make a loan repayment, am I paying like my premium too? And it's just like how your mortgage is one thing and your home equity line is another thing. Like that's kind of how the policies work too. Like your policy and your premium is your mortgage, and then your loans that you have out is your HELOC. So they're two different things. They both serve you in many ways.
That was an awesome analogy.
Thanks, Joe.
You'll be proud of me. So tomorrow I'm doing a recording, a case study video with Christy from Fantastic, and she's going to show me how using my home equity line of credit on my mom's house, and we're going to use that to pay off my mortgage, and we're going to see how fast that happens. You do the same thing, but she just was the first one to step up and say, "Oh, I'll jump on a Zoom and do this for you."
I've only been telling you that for 5 years, but who's counting?
Yeah, well, I wasn't counting when I kept telling you that IBC is what you should be doing, and you had to figure it out by writing a $150,000 check to a dealership for 2 cars that you'll never see any of that money back again.
And I figured I lost about $80,000 in interest in about the last 4 years too. And that is just going to keep on adding and adding and adding. And that's why I'm able to talk to people about it now.
Hey, Gabby, just real quick, I put in the private chat that link to Chris's design video. So I don't know if you want to put it in the main.
Yeah, I'll grab it.
All right, what else we got?
Okay. I did have something I wanted to put up here as like a talking point, but I lost it. Hold on, let me find it. Oh, here it is. Okay. So we talked a little bit about the 3-day. Might be some people on here that might not know what the 3-day essentials is, but I think this is a cool testimony. Yes, the 3-day essentials was the tool that I used to take the next step. Every essentials, I picked one new thing to dive in, which is actually what we highly recommend to people. There's a lot of information. Might be a little bit too much at first, but just find one that fits when you first get into it and go that route, see how it works, and then come back to the next one for another lesson and something new. So anybody else want to share about what the 3-day essentials really is and what kind of information it typically shares or how it typically goes? would be good enlightenment for some people who don't know what it is.
I'll share real quick. So like, I think pick a strategy that you can start now, but like, even if you have those other strategies in mind, that strategy can get you to that investment goal. Like when we were at the experience, there's some ideas and investments and opportunities out there, and they might be at like those numbers that I can't quite hit yet, but it gives me that kind of carrot to like make me not so spend so wildly and start saving so I can hit those benchmarks to get in on those opportunities. But also like doing a couple forklifts or doing some other strategy will get me there just as quick too. So you can kind of work in like whatever your end plan is, you can kind of get there probably through another strategy on the way, would be my 2 cents. I'll let somebody else add to
like
that.
Shauna's big goals. Have big goals and then make progress, because progress will make you happy. It'll make you keep moving towards that goal, and then just do it little by little, like how you eat an elephant, folks.
I mean, that's the whole
One bite at a
basis
time.
for what we're creating with the family office, the Done For You program is, no matter what stage you're at, you might be like just getting started where you're like, I'm buried in debt and I need a starting place, a launch pad, or you might be to the point where like all your debts are paid off or almost paid off and you're ready for that next step. Or you're ready for, I'm moving money from a 401k into a self-directed IRA. And I'm wondering like, how should I do this? What are the next steps there? Right up to, one thing, which I never talk about is, an option for people with $2 million or more. Like there's options throughout the entire spectrum. I mean, from probably 10,000 straight up to, millions and millions of dollars of places where your money can go to work for you. And what we try to do on this end is keep the risks, in check and make sure that they're as risk averse as possible, which is what this whole 3 days about. It's about risk aversion and minimizing risk. And, I wouldn't say maximizing return, but making a steady, consistent, predictable return while not taking risks. I mean, that's the name of the game right now.
The way I view it, it's exactly what Chris said, but it's people working with people, right? It's people helping people. It's you taking radical ownership of it versus saying, hey, guy or gal, that sounds really smart talking about money. I don't know what you're saying, but here's all my money. Go make it grow. This is giving you an opportunity to actually learn something, to understand it, and do what excites you. It gives you a chance to be the one that's driving instead of someone else.
Yeah, because chances are if you're watching this and you've ever given your money away to somebody else and you said, here, take it and do what you want with it, the reason why you're watching it is because they didn't do a very good job. So it's your turn to do that.
Shauna's reading minds.
Yeah, it must be the hat. It's also making me sweat, though. I'm getting very warm in this hat.
Not cold enough yet. Okay, Peter says, is it better to use a HELOC to prepay mortgage versus taking out a policy loan to pay off home mortgage?
Well, where are we on this? There we go.
It depends on if you're going to use the one-pot system with the HELOC. That's kind of where I would go with it. If it's the mortgage and then HELOC, then probably towards the policy way. If we were doing an all-in-one and absorbing the mortgage inside the HELOC, then the HELOC would go first, run that through the policy into an investment, and then circle it back into the HELOC as a one-pot system.
Yeah, Peter, also, when I finish this video with Christy, I'll send over what she suggests for mine, because it'll kind of be a hybrid of what Joe just said and what you're asking. So I don't have a one-pot system because my house is owned by a trust, so I can't get a HELOC. Joe, is there a bank that will give a HELOC on a house owned by a trust or no?
Probably not. Not ours. A living trust, yes, because they still have access to it, but not us.
Yeah, they don't like us because we don't own anything. So we're going to be using the HELOC on my mom's house, which is not a big HELOC, and then we're just going to be chunking down the mortgage. So it's really more of a thing of simple interest versus amortized interest, and you're just playing the velocity of money more so than you're doing anything else. So I'm actually super excited. It's tomorrow morning. I'm really excited to see how it pencils. She gave me some preliminary numbers, and I was like, hey, there ain't no way you're paying this mortgage off in that short of a period of time.
3.5 years. 3.5 years will be paid off.
I think it was less than that.
I mean, that's my average.
It blows my mind because it's literally not. I don't have to make any more money to do it. It's literally just direction of money. It's literally just where money goes. So like if that doesn't wake your mind up and be like, that's not possible. I mean, just to put it in reference, my mortgages, I think we have like 650,000 left, and my mom's HELOC's only $70,000. So I'm only going to be using 30,000 at a time for my mom's HELOC to do what she's suggesting. So I don't know.
But the 30,000,
it's one of those things that I'm sure we all said when we first saw IBC. That sounds too good to be true, but literally, it's just you're just not giving all that money to the bank. And
I just got excited for you, Chris. That's
I know, me
exciting. I got super excited for you because like when we have patterns interrupt, it doesn't matter. Like look how expert you are. You have more videos than anyone about all of these things. We talk about this constantly, yet you're still excited and open to learning something new. That's super cool. Totally. So I sit there and think when I'm talking to the people that Christy has rescued and helped, and they're talking about the velocity of money and using velocity banking. I don't know velocity banking because I haven't done it, right? I have not done it myself, so I cannot talk about it. I can talk about IBC. I can't talk about velocity. So I'm excited.
I'm excited to see it because I'll tell you, once I do it and once it starts working and I start seeing it, I'm literally every week I'm gonna be pulling out that or every month that mortgage statement, taking pictures of it and doing videos showing, all right, here's this month 6, month 9, month 12, and how it's working and just showing it. And if it works, like there will never be a day that anyone on our team ever says, well, that mortgage, I probably wouldn't pay your mortgage off because it's only 2.5%. Hang on, I got to beat the cat's ass.
However, that's why we're all here is because we get to watch Joe or Chris or somebody do something and then they share it with us. So that's awesome. And while we're waiting for Chris, I just want to give a shout out to Derek and Heather and Aaron and Julie and Eve and Mike and Dexter, who else, and Francis, who I see on the chat, who was with us in Vegas. So thanks for tuning in with us today too, guys.
Yeah, it was great meeting Francis for the first time too.
Yeah. Why is it that cats have to scratch the nicest furniture that you have when there's 6 scratching posts throughout this place? If you
and Tess is Facebook user. I know it.
Wondering who that was. They seem to know us pretty well.
Also, Derek, I sent you a surprise gift. You'll know it when you see it.
Okay, we'll go to Jay. Jay says, how flexible can the annual premiums and deposits be? In his case, he would dump in $20,000 with a target of $10,000 per year. Can it go as high as $50,000 and as low as $5,000 per year, as an example?
It can't go as high as 50,000, right? Like it can't. It's whatever you set it at is going to be your ceiling. So it can't go any higher.
That's
my answer.
This one. That's great.
It depends on how the term is used. The more term that's used, the more it's going to cost, but the more flexible it is. And we like it to be very efficient. So if we can narrow down those numbers a little bit better, get it closer to the MEC line, make it efficient, at least for one policy, you can always get another policy. I'd rather have 2 efficient ones than one not efficient.
I completely agree with that. And Jay, one of the things I'll say is I've seen this a lot with, like other IBC people out there where they're kind of saying some things similar. Not sure where the idea came up. Maybe you just came up with it. But one of the things I try to never do is to create a policy that's like so flexible that you could put, like you said, 50K in, but then you're probably only going to do 20, but then it might only be 10. Because you by creating that, in theory, it sounds good, right? It's a sales pitch. It's, oh my God, I could do anything I want. I can just make this thing to hold anything I want. Yes, we can. But what you give up is so much when it comes to efficiency. Your policy, if not funded exactly how it's built, if you strive to do it for 50 because you think in the future, I might be able to do it in the future, so I want the ability, but I probably can only do 10 today or 20 today, but I might only be able to do 10. Like by building it for that, which it can be built that way, you created a policy that will never be efficient, where Joe, like what he's saying, build it for today. And then when you're ready for that next step, build the second one for that time. And then you've got two very efficient policies. You've laddered them, and you can actually change up the designs on the policies to make one better for early cash value, one better for midterm. So you can build a whole banking system, as we always talk about, by doing it. But trying to make one thing fit all the things you want, you're going to make a real piece of crap is what you're going to make.
And by your numbers, it sounds as though you went to a different person, a different agent, and they said, we'll be able to go up to here and down to here, and we can put so much term on. Well, that is a commission play.
Yeah, they're buying you extra seats that you don't need, you probably won't use, but they're selling it to you as flexibility. Don't let them take the cheese off your macaroni, Jay. Don't let them take the cheese off your macaroni. Just get what you need.
Maybe explain as well, what does an efficient policy mean? Well, what does that mean to you guys?
As close to the MEC line as possible without going over to make it a taxable event.
A maximum efficient contract. There's the MEC. Right.
Oh, that's good.
Not
Another
mine, but it is good,
analogy.
isn't it?
Analogy number 2.
And I guess I would add to that efficiency statement, because policies can be designed differently, dump-ins, no dump-ins. To me, the most efficient policy is the one that solves your problem the fastest and the easiest way. So if you're trying to pay down debt, you want to look at a certain structure to pay that debt down as fast as you can. If you're trying to invest, how do I get the cash out the fastest? So a lot of those use cases kind of have to play into this scenario. But I would just say, Jay, as everyone's described already, this can be done, but it just won't be as efficient as if we just do multiple policies down the road.
That was the best answer, Craig. The one that solves the problem the most efficiently. Somebody should write that down.
Yeah, but to that example, do 2 policies. Do one with a $20,000 dump in and $10,000 a year, and then eventually do a $50,000 dump in with a $5,000 policy a year. Then you got 2.
There you go.
Okay, Joe, this one's for you from Eve. She says, is she on the waiting list for the forklift deals?
Yes, you are. Just call me. We'll get you going.
However, Joe is not part of the forklift deals, so I'll do the disclaimer for Joe. God, he's just implanting himself in your situation because it's you, Eve.
Joe just goes and drives them around the warehouse and picks up pallets.
How many do you have now, Joe?
I'm getting down, and then we're going to reload again. So I have one more to go, and then we'll restock. Actually, Chris yelled at me because he didn't want me to take his.
And Monday we'll be filming there, and I'm gonna drive mine.
Oh wow!
Wear that hat.
There you go.
It needs to sell.
It's funny how that happens. Shauna goes to Las Vegas, drives a Porsche GT2 RS, the fastest car on that racetrack, and now she wants to go drive her forklift. I don't see anything good coming of this.
I'm gonna spin it in circles like Joe did on that one video.
Let's see. I'm pulling it up.
Okay, while you do that, I will move on to Collins. In the chiropractor example, he still needs to pay back his loan for X amount of years, right? How long did it take to pay off his loan?
Example shows shows 39 months to get out of debt, right? And then the next part of the question is, how long did it take to pay back the loan?
The example.
Value.
What was it, like 5 years, Chris? 5.5?
In the chiropractor example, he still needs to pay back his loan for X amount of years, right? You know what? Yeah, I know what they're talking about. So when we made that video, the chiropractor example, the early versions of it, we did show the loan being paid back. So we went 6.5 years, totally debt-free in 6.5 years, but had $5,777 a month freed up from the debts he used to give that money away to. So what then happened in the old one is we took the $5,777 and rolled it back to the policy on a monthly basis, paying the loans down, which paid the policy back in no time. But it was kind of moot point, because if the money's in the segregated account or the money's back in the policy, the money was still liquid either way. So it wasn't a liquidity issue. So we kind of decided to cut it because it confused people. But in reality, in theory, we would always repay the loans to the policy, simply because why pay the insurance company 5% when we can just keep the 5%? I mean, the money's got to go somewhere, right? So it's either going to sit in someone else's bank or it's going to go back to your policy. So always pay the loans back when the money's freed up and not having somewhere else to go. That's going to be a big thing to talk about Friday as well.
Yeah, and we've got a model now that actually tells you that. So it'll tell you how long will it take to pay off your third-party debts, and how long does it take to pay back the policy loan. So, Joe, we need to see that in. If you can share that on the screen, we need to
Do
see
that again. That
made me dizzy.
Make Joe bigger. Steven, make Joe big.
Yeah, how do you do that? You should show it in like the boomerang mode, like never ending. Oh my god.
That's making me dizzy.
The forklift cowboy.
So funny.
Leave Joe on there like that.
No, don't leave me on that.
Oh, Mark says, let's get you driving one of the tractor trailers. Let's not.
Breaker.
Well, hey, I used to do trains, so we can do rigs next. Don't
Limit. Oh gosh, so funny. Okay, Peter says, I'm struggling with believing that with velocity banking, to pay down mortgage as the fastest way to pay off the mortgage.
Okay.
That makes two of us, Peter. That makes two of us, man. So I don't know. Tomorrow she's going to lay it out to me. I mean, she explained it in an email to me, and I mean, it's so simple. I just want to see it. I just want to see the numbers. And you know what? I know Craig's got a spreadsheet and Joe's got a spreadsheet that would show me. And now, so they've got it, and now I'm going to see it for the third time.
I'm really excited to see you do it, Chris, because you can do anything, and he'll be showing us all exactly how it's done. And so will Joe, because Joe's doing it too, it sounds like.
Only 14 years.
Well, maybe someday you'll do it for 15.
Oh, Dexter's got a good one. He said he's going to use himself for an example. In his first policy, he wasn't in the best shape. He was round.
Round is a shape.
Versus now, less round. Would that make more in regards to growth if he gets recertified, like in the medical exam?
Yes. But what you'd want to do is wait 6 months, because if you lose a lot of weight quickly, like what you did, I mean, first off, I think they're probably smart enough to know how you did it, but they're going to want to see stability of keeping the weight off. So in 6 months or 12 months from when you lost the weight, then you go out on your policy anniversary and you want to just try to get it reissued, or I'm sorry, get the rating reduced and try to get yourself a preferred rating, because you should hit a preferred with what you're doing now. But you just can't shed the weight and then go and get it. They'll say no. See the weight off.
In Dexter's example, though, he said his first policy, which I think he's had it for a few years now. Like, what's the case if maybe he's had one for like a year and a half, 2 years?
Probably good, but don't tell them that you lost all this weight the way you did, and just tell them, if they ask how'd you lose the weight,
much thinner now.
Better eating diet, fasting. I mean, all that's part of it. But then there's another piece that helped you lose the weight that I would leave out, and I would pretty much just tell them that you've been steadily losing weight. Because if you tell them, oh, I lost all the weight in 6 months, you're done.
Also, Dexter was looking good. I made sure I told him that. I was like, Dexter, you are looking good right now.
Absolutely.
Chris, I actually had a client who went to like an ambulatory center place to get a physical. They flipped the last two numbers of his weight, and then he tried to get a policy. And they said, you lost 60 pounds in like 2 months. And he's like, no, I didn't. And he was like, yeah, it took me a year, this, that, the other thing. I was biking. he had to actually go back and change the record for the insurance company through the medical place, and they had to see that they were wrong.
Joe, Andy just called it out on your forklift. Your forks are way too high. You're in OSHA violation, man. Don't do that.
Uh-oh.
You want to keep OSHA way out of the picture there with your forklifts.
I get OSHA ticket.
Best way is to not record yourself riding the forklift. But.
And live stream it.
Okay, Derek. Derek has a question for Craig. Does the out-of-debt spreadsheet have an option for debt being added? X amount every 2 weeks added to a credit card, for example?
No, right now it's more of a snapshot to say what are all of your debts, and taking in that consideration of your monthly pay down, but it doesn't have the flexibility right now to kind of add stuff midstream. But there are some things we could do to figure that out, but right now it's not built that way. I like the idea.
I do too.
So it's going in here, and eventually the mad scientist will create it.
By eventually, it probably means like next week or something. He's
well,
so fast.
Right now, Chris and I are whipping up some stuff for the 3 days, so that's not going to happen this week, but we'll get that done soon.
I like the idea too, and I know that Craig will. If anyone's going to figure it out, it'll be Craig.
By the way, if anybody just saw my computer just go crazy, this is why. My cat just jumped and kicked my computer at the same time. Okay. Go to Rick. Another one for Craig. Craig, do you have a spreadsheet that is used for velocity banking? You just got started in the all-in-one, but would like some way to forecast.
You might be really surprised. I know Chris is going to be shocked to hear this, but yes, I do have a spreadsheet for the all-in-one. So, yeah, Rick, just reach out to me. I can show you kind of
his line. That's his shirt. You might be surprised, but I got a spreadsheet for that too.
Yeah, so it's built all around the all-in-one. So if you want to reach out to me, I can get you hooked up with that.
Okay, yeah. So Jimmy's.
So the out-of-debt spreadsheet, it's a complicated thing right now. It's not really public consumable, but we do have part of the vision is to get that to the point where other folks could use it. But right now, it's just not a consumable format. What we can do is help you with the analysis if you want us to run your numbers.
Cool. Okay. Morgan says for Joe, have you done a training on velocity banking using a HELOC?
Coming soon. I'm going to start busting out of my shell, and once I get into the new house, we'll be able to have my own video set up, and coming soon.
Is that a pick? What's your date? Pick a date.
Enough.
Pick a date. Pick a date. There's a woman starting Taekwondo Legacy class tonight because she picked a date. Pick a date.
I wanted to be in there already. I bought it back in July. I
Hey,
can't
Joe.
pick a date anymore.
Joe, see, Jason's always trying to tell you to set boundaries. Set a boundary with him and tell him you're not giving him a date.
That'd be the first time in his life he set a boundary. So I welcome that too. Go ahead, Joe. Tell me.
I think that's because Star Wars is behind him.
Oh, so fun. Okay, Andy says, Chris, since the Fed is not raising rates, is ZROZ and TLT allegedly at the bottom now?
Oh, that's a trick question. So the Fed held rates today. The Fed held rates, but if you read the entire article, not just the headline, they're not done yet. I mean, he was pretty clear in the report. I'm surprised the stock market went up, but that just shows you like freaking hocus pocus, smoke and mirrors nonsense. Just, here's what I would say, Andy. I would say you're very close to the bottom. We're never going to get the bottom and we're never going to get the top is my easiest answer for you. So if you're searching for the bottom as a way in, now is the way in because you're never going to find the bottom and you're never going to get out at the top. So if you're searching those two, then please tell me when you find the white unicorn with the pink flowing mane because we've been looking for her. I mean, we put her on the shirt, the imaginary unicorn life, the IUL shirt, but we haven't been able to locate the unicorn. But when you do find it,
That's imaginary.
And that'll be the exact same place that you find the top and the bottom of any stock, any bond, or anything. I do think, in a serious note, that we are very close. But I do think that everything's still running a bit hot based on all the reports. Every report that the Fed was talking about in his talk was all saying everything's still running hot. And they are dead set about hitting this 2% target. And I think the only way they're going to do it is to seriously thrust this country into a recession and break the backs of the American working population. There it is. So when you find that unicorn, that's where you're going to find the top and the bottom of the market.
Chris, you missed this last week. I talked to a guy that we're helping, saving his life right now. 13 years in an IUL. 13 years.
Well,
and
he probably out of surrender.
He went and ran the numbers. You know what he figured out his return was over that 13 years? His average return?
6%.
What would you say?
0.56.
1.6. 1.6 over that time.
Better than I would have thought.
Damn.
Wow, 1.6%. Wow, he's getting some, man. He's getting some. 13 years. But hold on. There's more. 13 years, and of which 12 were the greatest bull run in history.
Yes.
So if it was gonna go up, it would have been then. Is that correct? Like if it was gonna perform?
It would have been then. It was then because that already happened.
You missed that last week. We talked about that last week here. That you guys were all traveling.
I still have to do a training on IULs. He'd be a good testimonial to have on. Ask him if he'd be interested in talking about his imaginary unicorn life that he was.
Okay,
living.
Sounds good.
I'll wear the shirt that day. Shauna was gracious enough to send me one. It's just not in my.
It's got to be Viv's favorite
White,
shirt. I saw her dressed up as like a princess. She was adorable.
It's got to be the proper moment for me to wear that shirt.
That stinks though for that guy, Jason. And at least there's people like him who share with us, like they're bad. Like we have Devin who has firsthand experience, and that guy at least sharing with you, makes it so we're not just hating without any sort of proof,
I've had some bad 1035s and bad different things recently. Like I had another one where the guy was in a Lafayette Life policy for 7 years in a design, IBC policy, and his agent talked him into switching to Ohio National like 5 years ago. And now he's calling me, and he's got a decent amount of cash value, like 180,000 in cash value. It's like 13, 14 years old, right? And he's wanting to exchange it again because he's getting I think his return from Ohio National last year was like 1.7% or 2% or something really low. And he's looking forward. He's like starting over again. But I'm like, you're resetting the whole clock again. I don't want to do that, but that's what he wants to do. So watch what remember why you start things and what problem it's solving, and just don't jump from one thing to the other because someone sounds better. Like really try to understand what you have.
Well said.
Yeah, don't go for the shiny stuff.
No.
Well,
I felt like the shiny thing helping this guy like crazy. Like, oh, you guys are great. You're building these high value, cash value and all these things. I'm like, yes, but you had I'm going to take you back to Lafayette. Like you're going to leave Lafayette 5 or 6 years ago, leave all that growth time, and you're going to go back to the same thing because that's going to best suit your needs based on the 5 A+ rated or better, usually owned companies we work with, dividend-paying companies we work with. So crazy stuff.
We'll move on to redheaded Tex-Mex. Piggybacking off of Dexter's question, if I'm the healthier one in the marriage, his wife has health complications, would it be better to get another policy under myself instead of her?
I would say right away it depends. It depends on your goals for your family. We've helped quite a few people that maybe less than perfect health but still get approved. It still does set up that guaranteed legacy. It still does work as a banking policy when approved. And if she's not approved, at least you know. If she can get approved, then I would say if legacy was a part of it, you want to do on her. If it's for more of the cash value and other things, then yeah, it would make sense to have additional policies if she's already protected on you. That, from what you told me, there's more details, like your goals and things like that, but that's what comes present. We got a lot of typers. You're a fast typer.
There's a lot of cool sound effects coming.
And
Okay.
Steven
Anybody else?
always looks so good in that lighting, huh? Everyone, look at him down there. He looks like he's at a resort.
He looks like he's at a rave or something.
Always.
Like there should be like bubbles or soap in the background.
Yeah, that's all he needs. Something coming out of the plant, some little flashing lights. Or something, right? So,
Lasers. You need Bryce back there like waving lasers around while you're
DJ
online.
Pauly D, baby.
if that wall starts moving like it looks, right? Starts floating around.
Yeah,
The real
People
Slim
floating in the
Snaggy.
background.
DJ was.
Joe would like that. They move like this, side to side.
You're one of those balloon guys too. My God.
Oh, with the big arms?
Yeah.
Yes. Oh, they're the best.
IBC. Okay. Colin says, I've got my call with y'all coming up. Any pointers to prepare? I've had my idea and goal with IBC and have seen 10-ish hours of Chris. I have a good concept of it, but what would prepare me for the call?
I don't know enough about the situation, but probably if you got debts, a list of all your debts broken out by debtor, balance, the amount you're paying per month, and the interest rate you're being charged. If that in all debts, including mortgage and car payment, that would be incredibly helpful for the Money Mentor. Also, a clear idea of where you want to be in the future, not just to say, I want more money in the future, or I want to retire in the future. Okay, if you want to retire in the future, how much per month does that look like? What is the whole thing behind that? So just be specific. Be specific in what it is that you're looking for and what you want the infinite banking concept to do for you now, and then they can take it from there.
I do want to give you a shout out though.
A full sheet of, like Chris said, all your debts, all your expenses, the monthly on them. Break it all down for yourself. Know how much you're saving. How much are you paying yourself now? Do you have lazy money? Bring us the full snapshot, and then your long-term goal, your short-term goal, and that way we can help you build a path from here to there.
Yeah, because it's a real like holistic look at everything you have going on and how this would fit best. It's not like fit it in at all costs. It's like, okay, we need to, finesse a little bit and see where it fits and how it makes sense for you. So definitely it's you're
just helping us too. If you do that, Collins, you help us, because nothing gets Chris more fired up than when he sees notes of people not knowing where they want to go. They don't know what their debts are. They ain't telling the Money Mentors anything. There ain't nothing to put, so they come in not knowing. I get there, hey, I have about $100,000 in debt. Okay, what's that look like? Well, 70s credit card debt. Well, how many? Oh, like 8. And then if you can't break all that down, it's really hard to build a path for you. It's going to require multiple things. So the more prepared you come in with your vision and what you want, the better we can help you.
Definitely shout out though that you have your idea and your goals and you've seen 10 hours of Chris, because I think everybody would love if the person who they were on the phone with had that behind them as well. But yeah, a lot of what Jason just said, the nitty gritty would be great. It'll get you there faster,
Yeah, and it helps it all make sense for you too. Like if we can show you this is what you're doing and this is how it fits, it's like it makes it night and day difference for you coming into it, just knowing what to expect.
And real quick, can we recap what lazy cash means? Like what lazy cash means for somebody who might be having a call coming up? Like to know, like maybe you go look and see, like where would you find like where your equity, like where, like on your most recent mortgage statement, you could see how much equity you have. Like how would you go about finding your lazy cash number?
Dude, I think just like a quick snapshot of it, that everybody could do would be, just type in your address online and see what Zillow says, Redfin, kind of get a gauge of what they all say. That's a loose, kind of valuation, but at least get that. And then look at your mortgage statement and see what's owed, and then subtract the difference between the two, and then multiply that times what, Joe, 80% or 70%? What are they doing now?
If it's under 833, we can go up to 90%. And then it's kind of based after that 85, and then up to $1 million is a straight 750, and then anything over $1 million, I believe, goes to 80.
Okay.
Another place is just looking for the leakage. So one of the things that might not be super obvious, like if you're not familiar with IBC and you're trying to pay off debts as fast as possible and you're snowballing them and throwing a lot of money at certain things, that's, in my mind, if you're going to start IBC, that's leakage. So how much are you overpaying the minimum? Like start looking for the leakage. Other lazy money will be money in a money market, money in savings, money for that rainy day. Because where is it better off? Like, we'll show you factually where the banks are putting their money, where you have more guarantees and more protection, where it's inside of a policy. So that's other lazy money other than like any HELOC. Because a HELOC still is going to depend on a lot of factors. It brings a lot of variables. So it's a lot more complicated in my mind to run through.
Yeah, and the other piece that I would add, and it almost goes back to Colin's question as well, of what should I come prepared with? When I'm having strategy calls, I like to know the whole picture. You know, what are you doing with your 401k? How much you're contributing? Are you contributing X over the match? Because, you know, ultimately you might find that you can use some of that money. I mean, I'm never going to tell you what to do. I would just say, hey, if I were you, this is kind of what I'd be thinking about. So if you're in debt and you're maxing out your 401k, does that make sense to do? Let's just talk about the options. So just kind of look around at your personal economy and come up with those things that you have in terms of your debts. What's in your 401k? What's in your savings account? You know, what's your income? What's that minus your expenses? Because the more you help us understand your situation, we can kind of stitch together some ideas for you.
Yeah, that's good.
Well done, all.
Okay, Jay is asking a follow-up question. If he's setting up one policy and the max deposit is $10,000 per year, but he has additional funds to deposit and should start a second policy, should that second policy be under his name or one of his kids who are minors?
Personal preference. But I mean, depending on the amount of coverage you have on yourself, I mean, I would maybe bulk yourself up first. You know, and again, there's still missing pieces here, Jay, that we don't know. Like if you know 10,000 per year, but you say in your additional funds, you mean additional funds in a year from now or in the future, or do you have additional funds now? Because if you have additional, dump them into the policy now before starting a second one. I mean, if you already have the funds, or if you're talking about like funds that may or may not be in the future, yeah, then at that time, what you should do is when that time comes where you're looking at the second one, get on the phone with us and like, let's look at both options. Look at doing another one on you, and then let's look at doing another one on a child. If you have multiple children, let's see, my name or one of my kids. So you can't, so I guess this might even answer it. You can't just do one of your kids. You can't be like, I like you, Jimmy, but Julie, I like you. You can't do that. So the insurance company will mandate that all of your children in the household are insured for the exact same amount within reason. And that's got to be within the amount of coverage you have. So you have to have more death benefit on you than your kids do, and they can only get death benefit up to about what you have, a little less. Which, think about it, if a child's a child, they're younger, so they're going to, whatever dollars you put into a kid's policy is going to buy a lot of death benefit. Like I put $5,000 into Vivi's policy and it bought like, I can't remember the number, but it was over $1 million in death benefit, like on $5,000. So it doesn't take long to max out a child if the parent isn't, if the parent doesn't have a good system in place for themselves. So chances are you're going to be doing it on yourself. Kids policies can be tricky, especially lately. Man.
Tricky. Yes. Goodness gracious.
Tricky. And we've been working with like the president of one of the insurance companies about like this issue we have with kids policies. It's like, for crying out loud, like, I know you guys are, selling life insurance, but we're building IBC policies for cash value. You know this. So like, how do we design kids policies that make us both happy? Because right now you're missing the boat. And the only company that we can get really good kids policies is one that doesn't like what we do.
Okay, actually, speaking of insurance companies, maybe we should take a second to actually address this piece, because I think a lot of people experience this. The underwriting takes forever.
It depends. Underwriting doesn't take forever unless there's medical issues or something that the insurance company is looking for. The biggest reason we see delays, there's two reasons we see delays in underwriting. Number one, the client has multiple medical files at multiple facilities. Maybe they had a surgery and the surgeon has one file and your doc, your primary doesn't have the file. So the insurance company is searching for the medical records to talk about that. They're called APSs, attending physician statements. So that can be a slow process. It's not because the insurance company's slow and the insurance company pays the doctor for these records. It's because these doctors, they're understaffed. They don't have support in many cases that is sufficient. So it just gets put on the back burner. So what I always say, if your underwriting is taking a long time, ask whoever the application specialist is why. If they say that the insurance company is waiting on medical records, call your doctor. Find out what medical records they're asking for. Call the doctor and say, doc, or assistant, or whoever it is that answers, please send my medical records this week. They're paying you. I need my records sent. And a lot of times that'll sway them to get it done. I've had clients literally drive to the medical facility and pick their own records up because the doctors just wouldn't do it. I don't know why. So that's more than likely what holds underwriting up 9 times out of 10. And then the only other thing is just, I'm sure this isn't your case, but a lot of people just fail to respond to emails that are sent by the application team for simple things like, hey, what's your income? Or, hey, we need this, or hey, we need that. And they ignore the emails. You're dead in the water. You're going to go through a slow process.
Yeah. To speak to that point, Chris, people forget that we're looking to get them approved to be an owner in a mutually owned company. So it's like you're submitting a trial application to be accepted as an owner. So you have to respond to get that acceptance. And for DM, I'd say cookies. Take cookies to the VA, because I appreciate the question, and that is part of it. Take cookies to the VA, call the department, be the polite squeaky wheel, find the solution, and go over there and cookies, donuts, something to get what you need, because per HIPAA, doctors can wait up to 30 days, and sometimes they don't even know they received them. Like for our son, our doctor's like, yeah, we'll respond immediately. But that's been a couple of weeks and no one has received the request for his medical records. So it's just a communication thing. Keep asking, ask your application specialist, like Chris said. It does slow down things sometimes, but typically it's pretty fast as long as you're responding.
Yeah. Well, I think we're a couple minutes over, and we do have another event coming out later tonight. So there's a couple that we missed, and I'm sorry. We'll definitely get to you next week. Just come back and just literally copy and paste that, and we'll answer it next week. But in the meantime, I hope everybody has a wonderful night. And Chris, everybody on the preview tonight, enjoy and have a great time.
Yeah, awesome. So, folks, I'm probably going to see some of you on tonight's preview in about a half hour. So we're going to rock the house, have some fun, and hopefully teach you a couple things. So we'll see you then. But to the rest of you, thanks for joining us for another Ask Me Anything. And to the team, keep on rocking. See you guys later.
See you later.